Brian Grimes, your real estate mentor, back with another action-packed session. Today, we're going to be talking about how to get a mortgage with no credit score. Absolutely no score. A lot of people have never heard of this before. So they're under the impression that if they don't have good credit or perfect credit, that they just can't get a property. They can't get a house to live in. They can't invest. Couldn't be further from the truth. So I'm going to break down how these no score loans work, how you can get yourself qualified step by step. So make sure you stick around to the end. And then we're going to break down the top lenders. So I'm going to give you the list of the top 5 lenders for no credit score whatsoever. So if you've been struggling with credit and that's what's been holding you back from getting your first property, make sure you stick around, ask lots of questions while we have you. And I will kind of dig through there and answer those questions as we go through. If you're new to the channel, like, comment, subscribe. If you're on IG, DM me cash flow. I'll send you access to the free training. I'm putting together a new webinar that'll probably be out as we hit 2025. So you'll want to tap into that. That's going to break down how to invest without cash and credit and a few other strategies that we'll go into that are more complex, like more advanced. This is really just straight line. Once you learn this stuff, you can kind of get started. If you're interested in our ride along, our next real estate ride along tour scheduled for January 11th, spend a day with me on site, viewing properties, inspecting properties, learning the cost of construction, how to put houses back together. We'll also be talking about ground up deals a lot as we get into next year as well. And we have our Inner Circle program if you want to tap into the mentorship, and then our Boots on the Ground program. If you want me and my team to find properties for you and build houses, either you can flip them or rent them. If you want us to do all the work for you, just reach out, DM me, Boots on the Ground, and we'll get you locked in there. Mindset for today is just to don't take too much vacation. Don't take too much of a break. I know the holidays are here. I know it feels like the right time to take off, but what you should do is utilize that time, the time that you have away from the 9 to 5. Spend time with family, enjoy that time as well, but take that downtime and try to teach yourself a high value skill. Real estate, the reason I love it is because it's high value, right? Like if you learn how to invest in real estate like a pro, you can out earn whatever your income is today. I don't care if you make 50K, 100K, $1 million a year. You can leverage real estate to surpass that if you teach yourself the skill, if you dive in, if you lock in. But you need the time to lock in. A lot of us are too busy with our work schedules, with our families, with our life to even lock in. So during the holiday, during New Year's, when you have those couple of days off or you're doing your family vacations, make sure you build in some time, even a couple hours a day, to just lock in on your goals, on your vision for 2025, so you can break yourself free from the 9 to 5, have more time to put into you and your journey. So if you guys have any questions, DM me. You can click the links in the description if you're on YouTube, and you can tap in, book a call with me and my team, and kind of learn more about how we can help you to find, finance, rehab, tenant, and manage properties, and just give you that done for you service. Let's get into this no score loan, because I don't want to take too much time here, because I'm doing the same thing you guys are doing. I'm at the vacation spot, and we're doing the family thing for the holidays. So no score loans. Here are some loan options for a no credit score home loan. So if you've been lied to, like most of us, like you need perfect credit to qualify for a mortgage, it'll never happen. This is going to be a little bit eye-opening for you. So what this says is, just because you don't have a credit score doesn't mean you don't qualify for a home loan. And this is even as an owner occupant. It just means your loan options are a little different. While there are special rules and regulations required when applying for a home loan with no credit score, you still need to prepare documents. So there are documents that need to be prepped. There is a process for qualifying. It's just not based on your credit score. So to make sure a no score loan is right for you, take note, there's a big difference between no credit score and low credit score. So some of these options are going to be no credit score whatsoever. Some are going to be low credit score, like you can go down to a 500 credit score. And I have actually multiple lenders that will lend to you even if you have like a 500. So even if you're working with next to nothing, you've been through bankruptcy recently, a lot of people that'll work with you. So conventional no credit score loan, what is that? A conventional loan is not secured by the government. It's important that you guys learn some of the terminology here, because this can really trip you up. Conventional loans are not secured by a government agency. The government agencies are Freddie and Fannie Mae. Those are the two big ones. So when you're dealing with a FHA loan, that is government backed. Whenever you have the government backed, the Freddie and Fannie backing the loan, you have to qualify from a credit score standpoint to a degree, and you also have to qualify from a debt to income ratio standpoint. You have to be within what's called a qualified mortgage. What we deal with a lot as investors is non-qualified mortgage. It's called the non-QM space, which means your debt to income ratio on a personal level doesn't matter. What matters to those lenders is that the property cash flows. So it's not quite a conventional, because conventional is more geared towards like owner occupied, and there are some investor conventional loans. But the non-QM market in general, which is what we talk about a lot in the 100 Keys Masterclass, that's where you get into purely investor loans. It looks like we had a couple questions. How to advance without a job income. Yeah, you don't need income. Well, you actually, no, you don't need income. You do need cash flow. So as a real estate investor, a lot of the times what'll happen is you will, or as any business owner, you could run a barbershop, you could run an auto body shop, you could be a driver. A lot of business owners are going to set themselves up to pay less taxes. So even though they're earning income, if you look at their W-2, or just kind of like their 1099 or tax situation at the end of the year, whatever they file, their tax refund, they may be showing like, hey, I only made 10K this year, so that they're only paying taxes on that 10K. Even if they made 150K, they're going to write off everything possible. That can make you look horrible to a lender that is limited to qualified mortgages. Their only way to lend to you is based upon your personal earned income. When you get into this space of real estate investing, there are a lot of lenders in the no doc space. They're called no doc lenders, and we may talk about them a little bit at the end. They know that you're a real estate investor or you're a business owner, and that your goal is to pay less taxes, and that you're going to write off a lot of things. So they don't look at that. They just look at your ability in terms of capital. Can you pay the debt? So they're going to look at your ability to service the debt. Can you make 6 months of interest payments on this loan? Yes. Do you have decent enough credit? Yes. Do you have assets or other real estate or rental properties that cash flow? Yes. Then they're going to lend to you. And they're going to base the loan off of the individual property's ability to cash flow and service the debt as well. That's a no doc loan. No credit is a little bit different, because this is designed for owner occupants. But you don't necessarily need W-2 income to qualify for a mortgage. That's like a myth. You just need to know which lender to talk to. If you talk to the wrong lender, a lender that is limited to dealing with your earned income, then they're going to tell you no. And they're going to also tell you that no one else will lend to you, because lenders want you to mentally think that if they don't lend to you, no one else will do business with you. The truth is, you just need to talk to the right person. One lender saying no doesn't really mean anything other than they said no this time, because some lenders will also say no. And then if you ask them again a little bit of time from now, they're like, oh, well, maybe things have changed. Yeah, we'll do it now. So you have to be careful with that. You have to be careful with that. And it's really why you need to get educated first. You need to understand this game. Um, let's get into the FHA no credit score loan. So FHA, Federal Housing Administration loan, is a great option for individuals with no credit score. It gives you the ability to take advantage of the benefits not available through other mortgage options. FHA insures these loans to assist more individuals with non-traditional credit histories. So it's secured by the FHA, making it easier to qualify. You can still get competitive rates with a FHA no credit score loan. One of the pitfalls of a no credit score loan is that your rates are going to be a little bit higher than they would be if you had a perfect credit or good credit score. So do expect to pay higher interest rates, but you can still do it. And there's a lower down payment with the FHA. VA also has a no credit score loan option. A lot of people don't know about that. But how these will work in general, and I think we'll have it. We'll we may have it here. I'm going to break down the different lenders here, but how these no credit score loans work in general is because they can't look at your credit to qualify you. What they're going to do is they're going to look at other assets that you have. If you have any property, if you have a business, your business is essentially an asset. They're going to look at that. They're going to look at cash reserves. They can also do things like look at 1 year's rent payments. So if you're currently renting, they can take your rent payments. And if your rent payments were on time, that can be used to qualify you for the mortgage. If you pay utilities, you pay your gas, you pay your electric bill. If you have a history of paying those bills on time, that can be utilized to qualify you for the mortgage. Because what they're trying to see, a no score lender, what they're trying to see is your ability to make on-time payments over a period of time. They don't really care about your credit score. They want to see that you can consistently make payments against debt. So if you can show that in another fashion, like your rent, like your utility bill, it could be a cell phone bill, they will qualify you. They will use that information to qualify you. It's really that simple. So there are a lot of different lenders. We're going to walk through a couple of them. If you guys have any questions, drop them in the chat section, drop them in the comment section. And if you're getting value, share it with someone else who you want to get value. But we're going to break down the different lenders. There's like 5 of the top ones that are out there for this and kind of what they look like, how they work with their clients. So let's get into Carrington. Carrington Mortgage Services is the first one that we want to look into. If this is a strategy that you need, if you've been looking for a way to get qualified, but you have credit issues, you want to look into Carrington. Carrington Mortgage Services, let me blow this up a little bit, is our top choice for borrowers with low scores. It allows lower scores than a lot of other mortgage lenders and ranks very high in customer satisfaction. With Carrington, you could get an FHA or VA loan with a credit score as low as 500, which is pretty much, whenever anybody tells me they have bad credit, they're usually in the fives from what I've seen. When I got laughed out of the bank on my, out of my mortgage broker's office on my first deal, I probably had like a 580 when I went to do my first deal. We did a rapid rescore, and then I qualified for the loan. Maybe in like 2 weeks, I was qualified. I was up to like a 640 or something like that through a rapid rescore. And I had a past due medical bill of like $300 that was holding my score back. So it's like the little stuff when you're young and kind of dumb. Carrington's standout feature is its Carrington Flexible Advantage Mortgage, which accepts borrowers who have recent negative credit events, such as a foreclosure or bankruptcy, on their credit reports. So even with a foreclosure or bankruptcy on your credit report, you still have the ability to qualify. This holds up a lot of people. Carrington does not lend in Massachusetts or North Dakota. Its average mortgage rates and fees are slightly higher, which you would anticipate. So I would look into Carrington if you just fall into that low credit score bucket, because they're just a little bit better than the others. Guild Mortgage also has a FHA loan. One of the perks is that there's a zero down program for FHA borrowers. So even if you're starting off with very little cash and you have bad credit, as low as like a 540, you can still put down either 0 or 3% down, get a property. So that won't hold you back. And if you utilize this strategy on a multifamily, I mean, you could take one of these loans and get a quadplex, a triplex, a duplex, rent out one, live for free. You can use the income from the other units that you would be renting out to qualify yourself for one of these loans as well. So there's just a lot of value there. Guild Mortgage is a great choice for both borrowers with low credit scores and those with no credit. Guild allows credit scores as low as 540 on its FHA and USDA mortgages. It also accepts non-traditional credit from borrowers who have no credit history through Guild's Complete Rate program, which is available on its FHA, VA, and USDA mortgages. So even if you have no credit history, they have a program called Guild's Complete Rate program where you can qualify. Guild does not, and this was one thing that is a theme that I've seen with all of these lenders. Guild doesn't display rates online, so you'll need to apply for pre-approval or talk to a loan officer to get an idea of what rate you might get. So they don't really. I'm glad somebody said, they're like, you dropping gems. Yeah, we're dropping serious gems. Most people never heard of this, and I'm only doing this because one of my mentees reached out. Somebody asked me, sometimes people are concerned about my health because I'm building a bunch of houses for everybody. They're like, Brian's got to stay healthy because he's building me a house. We're probably building like 30 properties right now. And they're like, are you drinking soda on the lives? This is seltzer water. This is seltzer water, sparkling water. I don't drink soda. I don't drink a lot of sugar. I don't drink my calories. No, a lot of people have never heard of this. And this stuff is out there. So it's kind of crazy that so many people, I'm telling you, more people come to me with that issue than anything. Oh, I don't have the credit. It's always cash credit, cash credit, cash credit. But I show you guys, you can get private money lenders, you can use OPM, you can do creative financing, you can get access to capital, or there are some zero down payment options, or there's down payment assistance. I've already broken down videos and done lives for you guys on down pay assistance, but there's also lenders. So you could take that down pay assistance, even with bad credit and even with very low capital, and still qualify for FHA level or VA level. We have a lot of veterans that follow us as well. So that's a new one. New American Funding has a FHA mortgage. Offers conforming jumbo FHA, VA, or reverse mortgage options. Recommended credit 580. That's a little on the higher side, I would say. Not quite there into where you're going to qualify with most, but it's still reasonable. New American Funding is an affordable option for borrowers thanks to its variety of mortgage options and flexible credit requirements on its government-backed mortgages. The minimum credit score for its FHA, VA, and USDA loans is 580, though borrowers may be able to go lower with compensating factors. So they do have some type of underwriting process where if your credit score is lower, but you can qualify through these non-traditional means, they may still rock with you. This lender also accepts non-traditional credit, such as proof of rent or utility payments from those who have no score. This is a lot of people. This is a lot of migrants, people who are just coming into the country. They haven't really built up. This is a lot of people from the Black and brown communities who weren't taught about credit or who were told to stay away from credit. Don't get a credit card. That's the way to protect yourself. So then you're 25, 30 with no credit. I talk to people like this all the time. No credit score, no credit history. So you can qualify yourself through these other ways. Additionally, it's I Can Mortgage lets borrowers choose from any term length between 8 and 30 years. However, you'll need at least a 620 to qualify for that mortgage. So even a 620 is considered on the lower end. It still qualifies you for most lenders, just at higher rates. Once you get into a 680, that's when you can qualify for most of the average rates. Once you get to a 720, at least as a real estate investor, you will start to be qualified for the best rates. You can go high, you can have a 800, but it typically doesn't get you more than a 740 or a 720 or 700 in some cases, from what I've seen. Next, we have Rocket Mortgage. I always take Rocket with like a grain of salt to a degree. But Rocket Mortgage can be really good because they're streamlined, they're online, they're really fast, they're nationwide, and they do have some of these ridiculous perks like offers affordable mortgage programs, including lender credits up to 7,500 and a 1% down conventional loan. Conventional can be important because when you get an FHA, you have PMI insurance, and that increases your cost maybe extra. Let's say on average it's $200 a month. That can impact your cash flow. If you're like me and you're buying and holding Section 8 rentals to cash flow them, and that could be the difference between $800 a month and $600 a month. It kind of makes a difference in how you would underwrite the deal. But that is there. They have 1% down, recommended credit score 580. They have conforming, jumbo, and FHA. A Rocket Mortgage is a good option if you want a smooth online experience and prioritize customer service. This lender requires a minimum credit score of 580 for its FHA and VA mortgages. Rocket ranks pretty high. They've been out forever. So definitely reach out to them as an option. Somebody said Rocket Mortgage is not good for minorities. That I don't know. I can't add credence to that. I don't have much experience personally utilizing Rocket. I've gone to them before for quotes, for pre-qualification letters, for different things. So I know that they can be good in that aspect. Like if I needed a pre-qualification letter to submit offers to win properties, I might go to Rocket because they have the online process, get the pre-qualification letter 30 minutes. and I can get a pretty high pre-qual. If they base it off of my, assumed income and different things, I might get a $250,000 pre-qual from Rocket. Now I can go submit my offers very quickly. So I might utilize the platform, and I've done that, but I don't know much about, them with minorities versus anyone else. One thing I'll say about minorities and credit, since we're really talking a lot about credit and this bucket, a lot of us haven't been told. Like, if you break down the buckets by race and credit score on average, you will see like who ranks the lowest on credit, just having it, and then average credit score, and then what races rank the highest. So a lot of the times when you start seeing the statistics and they're like, oh, well, only they'll give you a statistic like only 20% of black people get approved for a mortgage by this bank. And that's a statistic, and that's a real statistic, but it lacks context, because the context is, well, how many of the people were actually qualified from the traditional qualification boxes? So if you're dealing with a population that has a lower average credit score statistically, then statistically more of that group of people won't qualify if the qualification box requires a higher credit score. They will be qualified less than another group. So the statistics can be skewed or taken out of context in that sense. So I always dig into the data, and I'm like, well, how many of those people were qualified? And then you'll read in the fine print, oh, well, most people weren't qualified because of credit score, but that's not the message that they're trying to push. A lot of the minority groups have not been taught about credit, or have been taught incorrectly about credit. I've seen a lot of people, it's like the mom's got bad credit, she's putting stuff in the kid's name. So by the time the kid is even 18, they have bad credit. Whereas somebody else, another socioeconomic group, might teach their kids and then put their kids on a credit card when their kid is 3. They put them on the Amex. So now the kid is getting perfect credit from the parent. So then when they're 18, they have perfect credit. Then the other kid's 18, they got bad credit and no knowledge, zero knowledge of wealth building. So how can, and then those two people go off on their path. Let's say they both hit 21 or 25. One has bad credit that he was gifted from his family. One has good credit that they were gifted from their family. So both go into the world, both get the same job, both make 50K a year coming out of college, but one person has so much more opportunity because of their credit score and or their knowledge of how to leverage their credit and maintain good credit and improve credit. So it really is the knowledge. It really, having the knowledge, all communities having more of the knowledge, and some of the lower socioeconomic communities having more knowledge. That's why I do these things live, or else I would just keep the knowledge hidden, quite frankly. But it's part of it. Like, we need to learn how to leverage credit, also real estate. We need to know how to control the communities, and not only how to profiteer off of rental properties, but how to build houses within your own community. This is part of the knowledge that these communities need. They need knowledge of the real estate, how to maintain their own infrastructure, how to leverage that for wealth building and pass it down to future generations. Because it's kind of crazy to, and a lot of you watching this, you could think about your own line. So think about you, where you started at, think about where your parents started at, think about where their parents started at. If everybody started at essentially zero, zero meaning you didn't really inherit much, you didn't really have much knowledge of how to navigate out here as a business professional, if you didn't, let me put it in very easy terms. You weren't taught how to create an LLC, or where to create an LLC, or why, or how to maintain an LLC. You weren't taught how to build credit, acquire credit, leverage credit. You weren't really taught how to invest. You weren't taught how to manage money. Then what the fuck were you taught? How to just survive the matrix? Like, and there are kids that are being taught this, that are growing up in this, and inheriting and having good credit. And that is what leads to extreme gaps. Extreme gaps. It's not all education and like school-based education. It's financial education that's lacking. And those are the areas. You have to have knowledge of how to set up a business. You have to have knowledge of taxes as well. I shouldn't have left that out. So you need to have knowledge of taxes, real estate, insurance, business and LLC, understanding, asset protection and asset structuring. You have to have different levels of knowledge put in place so that you can function, and that would be on top of inheritance. Because if you're inheriting but you don't have any knowledge in those areas, you're going to squander. You're going to squander. So you need that level of knowledge. This is part of it. These lives are part of it. You know, educating people in real estate, helping people, building houses for people. I love building houses, but I'm doing it to prove to a lot of people that you can do this. You can own rental properties out of state, you can cash flow them, and you can build wealth. You have another option outside of the 9 to 5. But a lot of us need to just prove that so that our kids don't start at zero. Because that's the final end of that. It's not only looking backwards at your line and how many started from zero, and then did you essentially start from zero with no inheritance and not enough knowledge or zero knowledge in any of those areas that I just laid out. But then are you now going to start your kid with zero knowledge in those areas and no inheritance as well? Because I also talk to a lot of people. It's like if you got, and this is just reality, American reality. You got 30 to 50K in the bank and you're creeping up on retirement age, you better wake up. I don't know if you think people care. I don't know if you think the government cares. I don't know what you think, but you better wake up and start to learn about cash flow and assets like rental properties and real estate that can actually allow you to leverage wealth fast because you're running out of time. And if you do nothing, you will die broke essentially and leave nothing to the next generation. And that is the reality of it. Real estate investing, a lot of people are pushing it like it's, oh, real estate investor, just do this sexy thing. You can make all this money, and you can. You can make a lot of money. You can make way more money than anybody would be willing to pay you. But it's really about building wealth for your family. It's really about setting yourself up so you have more time to spend. If you can't spend it with your kids, maybe spend that time with your grandkids, trying to educate them, but trying to educate the line and do better for them. And that's what real estate is about. It's about exit strategy, freedom. Break it down another way. If you got 100K in your 401k and that kicks off 5% interest, 6% interest, which would be pretty high, quite frankly, that's 6K a year. It's not going to matter. Reality of the situation, it's not going to matter. If you take 100K and you leverage it with construction lenders and different professionals that are out there, and you put that into assets, you could acquire 4 or 5 properties that could kick off. Let's say it was $600 a month on average per property. You get 4 or 5 of them. It's $3,000 a month. Cash flow plus appreciation plus tax write-offs against other sources of income. That's power. That's freedom. That matters. So you have to take your resources. First, educate yourself so that you can take some of the risk out. Get smarter about this. But then take your resources, put them where they're more valuable. Very, very low value sitting in your 401k, quite frankly. Very low value. Very low value. Let's get into cross-country mortgage, and then we'll put a bow on this thing. We're at like 30 minutes. Cross-country mortgage. Here's what we got. Recommended credit, not applicable. I like seeing that because that means I can have absolutely no credit. Minimum down payment, 3%. That's good. Conforming, FHA, VA, USDA, jumbo renovation. buy down manufactured home, non-QM, which we spoke about. So you're seeing that right here, non-QM, home equity loan, HELOC reverse. They're doing everything. Cross-country mortgage is a good option for borrowers looking for a flexible mortgage lender, in addition to having no minimum credit score requirement on its mortgages. I repeat, in addition to having no minimum credit score requirement on its mortgages. It also accepts non-traditional credit such as rent payment history, which we've been discussing, from borrowers who have no score. So there you have it. I mean, you're going to have some of these things, higher interest rates on these. You may have a larger down pay might be required. A lot of people are walking around with capital, but they had a business, things got sour during COVID, their credit's hacked, but they got capital. They'll stroke those loans, because as a lender, if you could show me, let's say my mortgage was on a rental property $1,500 a month, that's about $18,000 a year, and then I'm cash flowing, I'm renting it out for $2,300, I'm pulling in $800 a month. If I can show that lender, hey, I got $20K, this bank account's average balance is $60K. I don't really touch it other to invest in real estate. Average balance over the last 3 months is $60K. I got the liquidity after the down pay to cover a year's payment. They're like, it's going to be tenanted. He could pay it for a year, even if it was vacant or something happened. Safe enough. They're going to write the loan. So there's lenders out there that they're just making basic underwriting decisions, which are based on logic. So that's something that you will see a lot in all of your non-QM loans. There's going to be some type of cash reserve requirement or threshold. Different lenders have different reserves, and then different loan amounts have different reserves. This can be a negative if you're operating at volume, which is really like the 100 Keys Masterclass. It's really what we teach. We don't only teach you how to get your first deal. Getting your first deal is cool. It's great. It's a good experience, but it's really about taking that knowledge and leveraging it and scaling it up to where you could do anywhere from 10 to 100 deals a year. You could do more if you want, but I don't think you need to do more. I think if you're doing 100, you need to pick the best 100, because 100 is enough to make a ton of money. You pick better deals, or you could scale a fund. You could do 1,000 deals in a year, and there are hedge funds that do. But that's the point of the knowledge. That's the point of going through a deal, is to get the knowledge of the deal and then apply it and go a little faster and build better relationships, better lenders, hard money, private money, exit strategy lenders, meet appraisers. It's to get in the mix, to become a player and set barriers to entry above and beyond the competition. Lender choices will be limited. We went over the top 5 here. I would recommend, if anybody's interested in this, even to get your own personal residence or try to get like a duplex or something, I would recommend reaching out to these guys if you're suffering with credit score or anything like this. VA, you can always put down like 0%, and most will go down to, not most, but some will go down to 500. So you can get acceptance there. We talked about all of this stuff, and guys, that should pretty much give you a good idea of how this stuff works. For me, and what you'll find in real estate in general, is be a logical thinker. You'll do pretty well in real estate, because real estate has a logic to it in general. And if you learn how one city works, or one deal works, or one rehab works, or whatever, you'll start to tie in that knowledge to other things, because it's almost like a similar logic. And the logic is, if you can make the payments, if you can show that you can make payments consistently, and or you have cash reserves, you just don't need much credit. Now, like I said when we started this is not the end all be all, because there are ways to invest without cash or credit. I'm actually in the process of putting a duplex under contract in West Philly, completely off market. Like, if I gave you the address right now, you typed it in, there's no agent, there is no middleman, there's no person. It's just us and the owner. So going off market and being able to get deals, even this deal, believe it or not, I could creatively finance this deal. I could structure this deal and acquire a duplex that doesn't need much capital invested into it. Maybe it needs 100K and it'll be worth, 450 realistically, but you can find that completely off market. And then if you have knowledge of how to structure those deals and how to um, make offers to the seller, you can control the property without ownership. And then you can monetize it. You can rent it out. You can rent to own it. You can do different strategies. So you can invest in real estate without cash, without any cash or credit. You just need superior knowledge. And that's something you must invest in. You must educate yourself. Just like if you go to college, people come out of college as a freaking social worker in 100K debt. And it's like, do that blindly, essentially, and something that really can't pay you 100K a year or more. Like I know a lot of social workers. I barely know any that clear six figures right now. But you can get that real estate education for 1% of that cost. You can get that level of real estate education to learn how to invest in real estate without cash or credit. Get started. I've taught this to people, had them, make 20,000 plus off of this type of deals, and then take that money, put it down on a duplex, get your multifamily. So it can be a stepping stone, but it's a well of knowledge that you can go back to, because once you learn how to source deals off market, you can kind of do that anywhere. You can box out the competition. So it's an ultimate hack. It's something I definitely recommend people getting into. And I just say in real estate, start at your level. 3 levels to real estate. There's the no cash, no credit level, which honestly is the easiest entry point because your way in requires the least amount of capital to a degree. It feels like a lot because usually when you're in that low cash, no credit stage, I mean, even investing $500 a month into a marketing budget seems extreme. In the grand scheme of things and what a property can make you, if one deal can make you 15 to 20K, how could you lose investing $500 a month? Even if you suck, you'll probably do one deal in a year and 5x your return. So it's a good entry point, and it's an easy entry point because you only need to do one deal successfully to 5-10x your return, and then you have the knowledge, whatever it took for you to get there, and you can leverage that into more deals. You can do as many deals as you want. The second level is when you have like that 20K you made off of your wholesaling or your creative financing. When you have that 20, maybe 30K, you're kind of in that range, you can start doing buy and hold deals. You can start doing the BRRRR strategy and kind of getting into that mix. When you get to like 50 to 100K, you can kind of do a mixture. So you can do some buy and holds and then mix in some flips here and there to try to, flip your way out. You could also do a flip with 20 to 30K and a good lender. But I think there's a security early on in the game and your first several deals to mix in as many rental properties as possible. Even if you start off with a flip to build up that, 40, 50K, 60K profit, your very next deal should be a hold. So either start with a hold or do a flip, get a hold, because you need to experience this cash flow and kind of how it can change you mentally. Having money coming in. Even I remember when I just got started, I had 2 properties. They were clearing 2,000 a month, and then I had the money from the 9 to 5, and then the tax losses and the knowledge that I could keep working, making some money, and keep doing it. Get another one, get 3,000 a month, get another one, 4,000, and just keep running the play. That's a very different game to be playing when some of your coworkers they're just in the 9 to 5, like they're just burning time. They're just burning time. Any money you get, if you don't invest it in a way that outpaces inflation, it's just losing money. Even as a savings, it's just losing money over time. So you got, moral of the story is you got to get in the game. You got to play to win. You're not going to win if you don't play the game. if you're going to play the game, it's a high stakes game. Educate yourself first. Learn how to fight before you get in a boxing match. You wouldn't go in a boxing ring, well, most people, without any training. Don't go into this boxing ring without training, because it's definitely a ring. It's definitely a heavyweight bout, and people aren't playing. There's contractors, there's crazy lenders, there's sellers, there's rogue agents, there's title issues that pop up, there's all different types of professionals that you need to interface with, and you need to be as educated as possible so that you look like you can punch back. It's really, really what it's about. You got to look like you can hit back a little bit on everybody. And then you need to have the architects, the engineers. You need to know how to solve your problems if you get into a jam. If you're in the middle of a project and you need to make some calls and shift some gears. So there's a lot to it. Get educated. Get educated. And then the last level, even out of the do-it-yourself, is like turnkey. If you have more capital, some people have 50K. Some people have 400K in a HELOC because they bought a property. There could be a New Yorker, got a property way back 20 years ago. Now it appreciated 800K because the market's crazy. They put a HELOC on the property, unlock 400K. You have that much to play with. You really want to go turnkey out of state, in my opinion. You could do it in your backyard, but most of our backyards are in expensive markets because most of the real estate in America is expensive. It's so expensive that if you Google top 10 affordable cities or top 10 affordable rental property cities, you'll start seeing cities that are identified and verifiably from a cash flow standpoint better than where you live. I would take my capital and go out of state turnkey. Probably Section 8 right now, because Section 8's paying so much because the affordable housing crisis is so bad. Really, nobody's talking about it but me. How bad the affordable housing crisis is and how I'm seeing the money is actually shifting into the sector. You get into that type of game, get the government to pay the rent, set it up turnkey, mailbox money, have management in place, and then scale and try to get as many as you can. Try to get 5, 10 a year for, hell, if you got 5 to 10 a year for 5 years, oh my God, 25, 30 properties. Even if they're kicking out 500 a month, it's like 10, 15,000 a month in cash flow plus tax losses. You're not even going to pay any taxes on that money. That's like, so you have to keep that in mind when these numbers come out. 15,000 a month of non-taxable money, or I'll call it tax preferred dollars. So maybe you're only getting taxed like, I don't think you're going to pay any taxes on that money. Just understanding what it would take to scale up to that level and the amount of losses you would accrue, you're not going to pay any taxes on that money. So that's like the equivalent of making maybe 23,000 to, I'm talking 15,000, maybe making like 27,000, probably making around 27,000 a month. That type of feeling, which is what? That's like 300,000, 330 a year. You could scale that pretty quickly, turnkey. It take you a long time to scale it individually and to learn. So turnkey becomes an accelerator in that sense. You can go a little faster and you can go into a better neighborhood. So those are the 3 levels. Wherever you're getting started, just start is the bottom line. If you're getting started at the no cash, no credit level, just get started. Just get started. Because the longer you wait, it's just the longer you wait. Just more time will go by. Especially if you don't have a better place to park your capital to make it grow. If you don't have a plan, or real estate is going to be your thing, but I'm waiting, I'm saving my way up, you're doing a lot of things and are good. You do want to be cash positive as a real estate investor. You do want to have your setup in a way where every month you have more money this month than you did last month. So you have something to put into your machine. But you got to get started. So even at that level, it's more of a reason to get started because, like I said, your hurdle is so low. You don't need 18,000 a month or 15,000 a month. You just need to do one deal, make 10 to 20K, and it's going to be life changing, transformative, mind boggling. So you just need to get yourself started on the real estate journey and then climb a little higher. Make that 20K, have half of the knowledge of acquisitions, and then you pivot the knowledge into the construction side so you can go a little bit further down the line. Then once you master that, you pivot your knowledge into long-term monetization and management systems. So hope that helps, guys. If you guys want to book a call with me and my team, if you're on IG, DM me cash flow. If you're on the YouTube, you can click the links in the description. Hope you guys got value. Hope you guys enjoy the time with your family. But like I said, stay locked in on the journey. Use the downtime to accelerate into 2025. 2025 is going to be a pretty amazing year, in my opinion. It's going to be a year of a lot of deals. Somebody said, how do you start with no cash and no credit? It all starts with knowledge. It all starts with learning how to get in front of sellers. Learning how to get in front of sellers. People who want to sell their house and who will sell it off market without an agent. If you can learn how to get in front of people who own properties, they probably are a little older, they live out of state. Talked to one guy, my son used to live in the city, but now he moved out, he got married. I'm too old, I'm not going down there. That's who's selling. So you learn how to get in front of them. Some people are going to have a more dire need, or they inherited the property and they don't know what to do with it. And then you take that property and you can control it without ownership through contract. That's how you do it. That's the game. So and anybody can do that. You just need a roadmap, right? You don't need to be smart. You don't need to be good. You don't even need to be comfortable or confident on the phone. You can hire somebody to make the calls for the most part. You can be just like a closer, and then eventually you could train yourself out of that if you wanted to. But that's the game. Getting the roadmap, which is why I say you just got to get started, because all you need is the roadmap. You don't need the money and all this stuff. You just need to know where to go, who to talk to. And you can choose cheaper systems, or you can choose scale. If you have more money to play with, you can scale it. Try to scale a little off-market operation. You don't have to know how to invest or how to build. You could just mark the deals up 8, 10K, sell them to a developer. You just need to know the cost of construction, what a developer needs to pay to build this house. And then you can structure in your profit somewhere between the developer and the seller. So having that knowledge, that allows you to get into no cash, no credit real estate. That is, that's what you're missing. That's what most people are missing. They don't have a way in. They get it. They're like, yeah, you talk to a seller that wants to sell, but then there's this fear that kicks in, like, well, how the hell am I going to find people that are looking to sell? How am I going to do that? That's got to be like, what do? You cold call people. People start getting in the fear. I'm afraid of the phone. I don't want to talk to people. I don't, all these fears come out. But realistically, it's just a roadmap. And when you see it done, a lot of the fear will dissipate, because you're just like, oh, these people are actually looking to sell. So you just talk to them about their house. Hey, when'd you build it? All right, cool. Set up an appointment, go see it. Looks good. Run your numbers, put it under contract. It's not that deep. So you can do it. But that's what you need to do. People make no cash, no credit real estate investing sound so damn taboo. Like, it's like, oh my God, like, how did you do that? That's got to be a scam. That's got to be something. It sounds too good to be true. And it's like, it's not too good to be true. It's a skill set and it's a strategy. which requires work and effort like every other strategy, but it has a profit yield associated with it, a speed of execution, and a risk profile. So you just learn it as a strategy, you execute on it. And then that's one thing, it's kind of one box ticked at the end of the day. As a real estate investor, you need to have knowledge of acquisitions, where to get good deals, go to the auction. Let me put it this way, you should know how the auction works. You should know, you should have a list of wholesalers and see their deal flow. You should be having an understanding of the auction. You should be scanning the MLS constantly to see what's going on in the MLS and what properties are selling for and what markets are changing. I'm seeing a zip code change right now where I've been holding some I've been holding some value. I'm seeing a zip code change right now that nobody is really looking at. That's been severely undervalued, and it's about to 3x. I promise you guys. But that's because I'm looking at it and I've kind of seen it happen. So you should have knowledge of those areas, acquisitions in all these different areas, wholesaling and getting in front of sellers directly to the table. That's like a mastery level, because it's very easy to go on the MLS. It's very easy to call a wholesaler, say what deals you got. A little bit more of an off the top ropes move to really get in front of motivated sellers, especially if you're trying to figure it out on your own. But to get a blueprint for it, you can definitely, all you have to do is find somebody who's already doing it and then do it. And it's just a volume game. So if they can show you how to get in front of people, now it's just a question of how many people do you talk to. There's always a percentage close rate. You're never going to close 100%, but there's some percentage, 20%, let's say it's 20% close rate. So you talk to 5 motivated sellers, which you could do in a month. You get one deal, you get rid of it, you make 10K. This ain't that old wholesaling either, where it's like, oh, you got to blast text and do this and blah, blah. That stuff kind of burn out. The carriers burn a lot of that out. Not that people don't still do it, but it's just like it's an intense game. You're playing against really big players there. Setting up a basic system, any system that gets you directly on the phone. That could be Instagram, YouTube ads, Facebook ads. That could be direct mail. That could be cold call. That could be bandit sign. There's a lot of different strategies, but if it can get you in front of 5, maybe 10 people a month, then you can make some money just on the law averages, not on being talented. I wouldn't build it based on being talented. You'll get talented with more practice. You don't need to be talented to start. That's just another mental hurdle, another mental roadblock you threw up for yourself so you could go slower and feel better about it. But the sooner you learn, the better off you'll be. Have that level of knowledge, and then just scale it up. Scale it up to construction knowledge, then scale it up to out-of-state investing, because out-of-state investing knowledge unlocks you. If you can invest out of state in one city, you could do it in any city. So you just have to build that skill set as well. Learning how to analyze deals, learning where to see value. This is one of the biggest skill sets, right? Because any market could change at any point in time. You could be in a profitable market and then it changes. Can you get up and leave? Can you go make money wherever the value has gone? Because some market is always going to be the most valuable market at that point in time, or within the bucket of the most valuable markets at that point in time, because value is constantly changing. Just like I'm telling you guys, there's a zip code that I'm seeing and I'm like, wait, those properties are going for 60K and they're still going for 60, but the sales on the top end are like creeping on 300. And I'm like, damn, that spread is 250 spread in Philly. That's not going to last. There are going to be other cities, sister cities, cousin cities that pop up, and the value, the developers go there next, and the value pops up, and there'll be investment opportunities. If you know how to invest out of state, you'll understand systems and turnkey systems you can tap into to try to leverage value remotely. That gives you a competitive advantage over an investor who's locked in to a single area. So that's the ultimate, that's the ultimate level, is being able to take all of the knowledge and then apply it from anywhere. If you can do it in another city, out of city, you could be out of the country doing it as well, because you're not there. So that means you could also do it from out of the country. So now you're unlocked. You live in a different dimension. You're unlocked locationally as well. So there's a lot of reasons to want to get to that level of knowledge. Notice we're not talking about assets or even cash flow, but just that level of knowledge. You can always create cash flow and find assets and you can always do it because you have too much knowledge of how it's all structured. You can just see better value and then just choose deals that long term are just going to have superior value to other deals. Don't overpay, don't overrush. If the market dries up, pack up and keep an eye on the market. Keep scanning the market. So that's kind of that mixture there. So I hope that helps, guys. Happy holidays. Enjoy the time with your families, with your kids. Stay locked in on your goals and don't get left behind. Don't stay stuck. This is 2025. Some people are going to accelerate on you. You want to be a part of the pack. So keep running and get in wherever you're starting at. Best advice, get in now, learn, accelerate faster. I'll see you guys on the next one. Maybe it'll be like almost at the new year. I don't think we're going to do one next Monday. I may do another live this week, but we won't do one next Monday. Appreciate you guys.